what are some of the issues that in the due diligence process that people need to be aware of that are completely different to residential?
Yeah, no, great question. It's a complex one to answer because there's so many different layers. So firstly, what justifies the yield? So many things. So industry, asset class, length of lease, age of building, potential for growth on even things like the raising build costs we're seeing at the moment. That actually flows through into future capital growth because it decreases the supply of properties because developers can't make their margin. So it's the same stuff that happens in residential. As build cost up, you're not going to see off the plan apartments built at the same price. So that's good for existing stock because it'll slow supply down. That's good for rents. So we're seeing a rapid rent growth phase. But Veronica, to answer your question, it's due diligence is the most important thing. Like basically, I've got a dedicated team at my company, Rethink, to do all the due diligence. They're basically a bunch of guys that have all different backgrounds, some developers, some valuers, investors that have worked for managed funds, stuff like that. But they will look at the rent rates. This is the first due diligence thing you check. Make sure the rent's not overstated. It's the easiest dodgy game in the book to your uncle's going to make a fake lease, double the rent, and then 10-year lease. It looks great on paper, and some people go for these. This is where your first-time investors can get really burnt. You could overpay the property by a factor of 2 without even knowing it.
Sure.
So the way to cut through that mess is just check market rates, and then you can start going, all right, well, now I know the fair market rate is roughly where the current rent is. Is that tenant viable? So we want to see bank statements from at least for the last 3 years. I want to see how these guys went in COVID. I want to make sure that they're just not a company that's in decline. Like what's their competition in that area for, like if it's a gym, are they building another gym next to it? All that kind of stuff. And it's hard. And if you haven't been exposed to the business world and been around this stuff, it's hard to sort of get it all done in the right time. So you've got to act quick because you only got 21 days generally to act on all this stuff. So the yield is the hardest bit to factor because it's like you guys, when you're looking at a residential property, you need to sort of know where the market's heading. You can look at comparables, and obviously there's a lag in data. The worst thing about commercial is there's almost no data out there. Where do you get an average yield for medical centres in Adelaide? Good luck. It doesn't exist. So it's got to be manually sourced through agents. So your Colliers, CBREs of the world. We're lucky because we see hundreds of valuations a year, so we kind of make sure we take account of every comparable. So it's almost like an inbuilt data system because without it, you are flying blind on the yield if you're coming in to buy your one property per year or half decade. So that's the due diligence. Don't overpay for it. Make sure the rent's good. Make sure your tenant's not going anywhere. We call the tenant up as well. I want to make sure that tenant's happy with the building. Tell me about your car parks. Is there any leaks in the roof the builder missed? Just chat to them. They'll tell you a lot. And if they're not happy, don't buy the property.
Yeah.